Welcome back to the channel, everybody. I am Mick Alphaname. Holy smokes, we got a lot of news today, a lot of exciting good news in my humble opinion. Let's begin right here. I hope you're all having a good day out there. This article is from newsbtc.com and it's titled 100 XRP. I have to laugh because I already know it's going to set some people off. 100 XRP needed to become a millionaire? Question mark. So it's Val Hill Capital. You know they're about to shake things up. They always do. Val Hill Capital has published a new research paper assessing the fair value of XRP, and the results are astronomical. I expect nothing less from Val Hill Capital. I don't. The private equity firm explains in this research paper, that's all it is, folks. I'm just saying, they're going to give you some numbers here. I love it. I'm not turning it down if it goes there, all right? Explains in this research paper using 6 pricing models. So they're using science behind this. You don't have to agree, but they're using science. Says that the fair value of XRP is somewhere between, get this, $3,500 and $21,900 per token. Now, you let me know in the comment section if you agree to that. Do you believe XRP can go that high? You tell me. It's a team effort here. So I'm putting you on the fire. I'm putting you out there. So as one community member pointed out, it would only take 77.9 XRP to become a millionaire at the median price of $12,822. Even at the most conservative projection of $3,500, 285.8 XRP would be enough to become a dollar millionaire. Keep in mind also, here in this little piece, I know you could probably go download the paper yourself, and you probably should. But this doesn't talk about timelines. Just keep that in mind as well. And like I said, once more, I'm not saying it's going to go this high. I'm not saying it's not. I'll take it. If it goes there, I'll take it. All right. I'm here till the end. I'm here to see what that bank money is going to do. And I'm here to take as much of that bank money as possible, as humanly possible. All right. So that is, I love it. It's fun. It's interesting. And in a very difficult time, we need things like this here. This is Molly Elmore, Chief Marketing Officer at Val Hill Capital, shared the white paper titled A Comprehensive Approach to Determine the Fair Market Value of XRP via Twitter. All right, we're going to stop there. Once again, that's on newsbtc.com if you want to read the rest of that article. That's not all. We have a lot of good stuff coming up here. Let's get to this next article. This next article is titled, and I hope you all had a fantastic week. I know you're out there conquering things. I know you're out there doing big things. Make sure that you're showing love to the people around you if you have people that you love. And I hope that those people are showing you some love in return. All right, make life good. We make life good. All right. So this article is from U.Today. And it's titled XRP for Fiat Options Expand Majorly Thanks to This Integration. Let's scroll down, see what they're talking about. It says Zoom, a well-known wallet within the XRP Ledger community, recently made an announcement regarding its partnership with Uphold, a centralized multi-asset trading platform. This collaboration entails the integration of Topper, a fiat to crypto on-ramp solution developed by Uphold. It says, thanks to this integration, Zoom now boasts enhanced flexibility, enabling its users to conveniently purchase XRP and other tokens based on the XRPL using their credit or debit cards. What sets Topper apart, as reported by Uphold, is its primary objective of achieving higher approval rates compared to other digital asset market solutions. An exceptional advantage of Uphold's on-ramp is its access to jurisdictions like the United States and Canada, where accessibility to such services is limited. Uphold's dedication to expanding accessibility aligns perfectly with the continuous growth of the XRP Ledger ecosystem. So XRPL continues to get stronger and stronger and better. That's what I want to see. All right, everything continues to look good. We're winning the fight so far. Let's hope it continues. It says here, it is noteworthy that Uphold is one of the few U.S. platforms openly supporting XRP. Yes, but one of our great subscribers here was informing us that Uphold has certain licenses that others do not. So even if they had certain, let's say, certain things didn't go our way, they could still move XRP because of certain licensing that they have. I'll just leave it at that. It says, despite the uncertain regulatory status of cryptocurrency, Uphold has not delisted XRP since the SEC's case against Ripple. Once again, our subscribers, one of our great ones, let us know that Uphold has particular licensing. They don't have to worry at all at any time. This is what I've been told. This is what I've been told. All right, so the good news just keeps coming in. Good predictions keep coming in. This article is from U.Today, and it's titled, Renowned Crypto Blogger and trader Cameron Faust recently made a bold prediction regarding the future of XRP. You see how we're getting one after another? Great predictions about XRP. Massive predictions. Something's brewing, in my humble opinion. There's no way that all these people are feeling bullish at the same time. And yeah, I know that the case could end soon, but like I said, I've said it before, we've had multiples of dates. I've never seen such fervor like what's going on right now. It's almost like someone behind the scenes is saying, hey, everything's going our way. Hey, we might have a victory here. Start generating a little bit of interest. And you know who's taking interest? The banks, those small banks, the commercial banks. There's a lot of them that we still have to reel in. They're the ones going to be taking interest. They know what XRP is. Because you know why I say that? Because the retail investors definitely are not the ones taking interest. Not from what I've seen. Let me just say that. Not from what I've seen. There's so much hatred for XRP when it comes to retail. Oh, my word. There's been a job done on the retail aspect, the retail investor. But not the banks, not the NBFIs, non-banking financial institutions. So anyway, let's read this here. It says, Faust, my apologies if I'm mispronouncing that, took to Twitter to share his insights, claiming that XRP is currently setting up a remarkably bullish and explosive pattern within the crypto industry. And we've read multiple articles. We read one that was saying 60 cents soon. Then the other one yesterday, or was it the day before, said 80 cents. Of course, listen, that case ends. I believe it's going to blow past all of that. But that's just my humble opinion. It says, the trader emphasized that XRP could be the sole coin with the capacity to make investors rich this year. I like the sound of that. However, he also warned that the opposite outcome, leaving investors financially strained, remains a possibility. For who? Lots of people got in XRP super low, been sitting on it for a while. And they knew what they were getting into at the time. I don't think most people are playing with any capital is detrimental to them. And just from what my interactions, anybody who feels like or felt like they had to liquidate and move on, a lot of people have left. They've moved on already. I think, just my humble opinion, I think the people that are left are ones that this capital is not detrimental to them, and they're in it for the long term. So they're not going anywhere. They're not concerned with any of this little price action at all. All right. So that's just my humble opinion based upon my knowledge and experience. That's all. That's all. If you can disagree with that, I'm perfectly fine with that. Let's continue on here. It says, analyzing the chart accompanying Faust's tweet, it becomes apparent that XRP's price is steadily approaching the 54 cent per token level. I agree with that. I mean, last I checked, we're at 53 cents. Correct me if I'm wrong. And it was looking very nice. Adopting a trader's perspective, one can observe that XRP has undergone a year of accumulation below this level, coupled with several unsuccessful attempts to surpass it. However, the cryptocurrency has now begun to display signs of resilience, retreating less and establishing higher lows. Notably, the volatility of XRP has also witnessed a decline. Drawing upon classic view of price action, this pattern could potentially indicate a preparation phase for robust upward movement. You don't say. Our time is coming. Not financial advice. I'm not a financial advisor. But all the visionaries, not all, I don't want to say all, but many visionaries and brilliant minds are saying the time is near. I don't know why. It just sounds cooler when you just lower your voice like that and you get serious. It's just a cooler way to to deliver information. Get serious for a minute out there, people. My word. Anyway, let's move on to another article here. All right. So It's Friday. I'm feeling good, man. We survived another week. This was a hard week. Oh, business has been difficult, but we made it again. We made some money. We persevered. We lifted some weights as well. We cleared our minds. We did what we were supposed to do. We conquered the week. It's Friday. Feel good. You're the champ. That's why I say that to people. You're the champ. You're the champion. All right. So this article here is from Bitcoinist.com. This is my humble opinion. I think you're the champ. Why not? And it's titled CBDC Development Endeavors by Ripple. And it begins here. It says, a Manhattan-based publication, American Banker is taking note of Ripple, focused on the financial industry, has revealed Ripple's efforts in ensuring secure minting and distribution of central bank digital currencies and stablecoins. The Financial Reporter noted that Ripple's recent central bank digital currency platform launch is part of its preparation to bring these goals to fruition. Ripple's CBDC platform enables central banks. Listen, and what do you think is at the core of all of that? When it's all said and done, what do you think is going to be moving all of that? My humble opinion, XRP is moving everything. What did the BRICS nations say? They want a decentralized system. They don't want any central authority because that hasn't worked out before. So XRP is going to be moving massive value, possibly because of what most of the world is desiring, a decentralized, efficient, transparent system that keeps things, how did they phrase it? Fair across the board. Oh yeah. Ripple CBDC launch and focus. And listen, what is now doesn't have to be what is then. There's are starting points. So just like Liquidity Hub, this is where they're beginning. It's not where they're going to end, right? This is the start. It's not at its full potential. Things will grow. XRP will be fully utilized, fully integrated. First, you start with little steps and then we run. That's how everything begins. And of course, you have to play things safe right now for a variety of legal reasons, right? All right. But we will see in the future if people are willing to see, if people are willing to be there in the future, then we will see in the future how all of this plays out. But so far, every step of the way, we've been pretty accurate. All right, so it says here, Ripple Labs launches CBDC platform May 18th, 2023. In a press release, the developers stated that the platform will allow governments and other institutions to issue their digital currencies. Never forget that interoperability that XRP and the XRPL brings. They're going to need it greatly. Even within the BRICS nations, they don't want one having any type of leverage over the other. They want it fair across the board. One currency's value feeds into another, all the systems glued together, but their individual CBDCs being sort of cultivated to accommodate what they need specifically. But then you have XRP there in the middle, the XRPL to glue everything together. That's major, especially now that they're going to be adding a renewed focus to retail CBDCs, right? Before it was all about the wholesale. I'll take the wholesale outright. That's big money. That's trillions. But we have the trillions there, okay? We have our eyes set on that. But we can also, and I said this all along, you could also take a huge swath of that retail value. Now, don't get me wrong. You got XLM there for retail. Don't get me wrong. But when you're a diversified individual like myself, you have some XLM, you're deep in XLM, you're deep in XRP, you're deep in Algorand. I don't care where the value comes from. To be quite honest, I just want that value to come. Get in here. Grab that capital, right? I mean, we're here to make money, correct? All right. We want that bank money. Let it flow wherever it can come from as fast as we can take it. So now here it says this platform enables institutions to manage fiat-based CBDCs, including other activities such as minting and distribution that we know about. Let's scroll down here. It says, notably, American Banker believes that Ripple's focus on CBDC development has successfully eliminated barriers common with cross-border payments harnessing blockchain technology. This is American Banker saying this. The future's bright for XRP. That's how I personally feel. There's no way you have all of these entities. We have people from the U.S. Treasury working with Ripple. Ripple's working with all of these central banks around the world. You have American Banker coming in saying, hey, here's the stamp of approval for Ripple and XRP. Let's keep going. It says the Republic of Montenegro recently signed an agreement with Ripple to develop a digital currency strategy and pilot program to launch their first digital currency. Regarding this, the Central Bank of Montenegro Governor Zujic shared his thoughts on the development. The executive said that based on their commitment to following national banking trends, CBCG remains committed to following an efficient financial system. Ripple CBDC platform gaining ground rapidly. Ripple Labs remains at the forefront of the global payment industry, hosting top financial institutions such as Tranglo, MoneyWatch, Neum, and Corpay. Oh, you're not even scratching the surface. And when we're all done, we'll have thousands of banks, in my humble opinion. Thousands. So according to a May 18, 2023 report, the firm is currently holding talks with over 20 countries on CBDC plans. Ripple also continues to pursue the CBDC platform advancement and is ranked #1 on Juniper Research's competitor leaderboard for CBDC and stablecoins. #1. All right, so now let's move on here. They go into a little bit of SEC stuff, but we don't need to read that type of material right now. So this article is also from U.Today, and it's titled, XRP Holders Lawyer Wants to Represent Coinbase and Binance Customers. Well, it's just individuals just doing good business, in my humble opinion, and has had great success. Why would he not offer those services, and why would they not accept? So it says here, reality has set in with both Binance and Coinbase exchanges set to defend themselves against charges brought by the United States Securities and Exchange Commission in court. In light of this, XRP holders lawyer, John Deaton, is making a move that will also see him represent the users of these two exchanges by filing an amicus brief on their behalf. Deaton's position. So taking with his favorite communication channel, Twitter, Deaton shared his insights into his role in the ongoing Ripple versus SEC lawsuit and what similarities the case shares with charges brought against the duo of Binance and Coinbase. He noted that while he did not support Ripple Labs as a company, he will also not be supporting or working against Binance and Coinbase. He pointed out that the fact that the SEC cleared Coinbase for its IPO more than 2 years ago and is backtracking on its support now is evidence that the market regulator is not acting in favor of users on this platform, which is a great point. Very good point. Attorney Deaton said he also does not expect the two exchanges to defend their customers directly, but to focus on their own products. That makes perfect sense in my humble opinion. Quote, as I said to the judge in the Ripple case, I expect Ripple to look out for Ripple and not individual XRP holders. The same applies to Coinbase and Binance. But the SEC is not acting in the best interest of retail crypto holders, and that is for sure. 100% I agree with that. The SEC has an agenda. Well, they told you, right? When Gary Gensler, who is questionable things that he's been saying as of late, when he says, well, we don't need any digital currencies, which is ridiculous. So you want the BRICS nations to surpass you and sink you because they're all going to be having interoperability through digital currencies, real digital currencies, by the way, blockchain, DLT, hash graph based digital currencies, right? And all trades are going to have to be done in that way in the future time for transparency and keeping everything level across the board, right? Fair across the board. So you're saying that the United States doesn't need that? They're not going to need to interact with those individuals, right? On that level, in that particular system, the new so-called global system. And the dollar, he said, well, we have a digital currency. It's the dollar. Since when? The FedNow system is not digital. I don't know if people know that. Just go ahead and do your own research. FedNow is just Zelle. It's their version of Zelle, Venmo, PayPal. It's an account-to-account based system. And also, you have to pay a monthly fee for that. What's the monthly fee on FedNow? $25 a month? Who's paying that? For what? For Zelle on steroids? That's it? That's ridiculous. That's nonsense. Then on top, so let's shut that down. So then on top of that, let's say you're talking about any other system. There's a difference. And the Bank of International Settlements specified this. This is why it's so good to do research. There's a difference, according to the BIS, just in case the United States government wants to say, no, it is digital. Well, according to the BIS, there's electronic money, e-money. That's what the United States has, electronic. See, they're trying to play with the words. Electronic money is like Zelle, credit cards, all of these different things. That's not digital. Digital is distributed ledger technology based. There's a fundamental difference there. Look that up for yourself. It's not difficult to find those documents, especially not on bis.org. They make it very easy to find those documents. All right. Okay. So what does that tell us? That says that Gary Gensler is just a pit bull of the legacy system. That's it. To keep things the same way they've always been. Right. And destroy anything that is a threat to them. That's all. And why? And what can we add to that? That lends credence to that? Because their banking system, I don't think that they ever thought their banking system would collapse the way that it has been collapsing. And make no mistake about it, it's still in a free fall. Just the commercial real estate sword of Damocles hasn't fallen to injure them as of yet, but it's coming down. Watch that video yesterday. If you didn't see that video yesterday, watch that video yesterday. There's a chapter in that video yesterday that's literally titled Warning. That's why I titled the video Warning, so we could draw people to that particular chapter. And in that chapter, I was talking about what Janet Yellen said. When you listen, I've been saying this for months about commercial real estate and in correlation with 900 banks at the time that they said were in jeopardy. Listen, if those dominoes begin to fall, it's going to be a bad time. So the legacy system never thought that they would fall this much. This is my opinion. So now they're afraid. They're saying, wait a minute. At first, most of them wanted to congeal with the bank coins. Many of them still do. The big banks still want to congeal. They're still going to congeal. But the medium-sized banks, they're in trouble. The small banks, they're in trouble. And they're saying to themselves, well, wait a minute. You mean to tell me we're not going to benefit from the new financial system because we may go out of business or have to merge with the bigger banks? Remember how they absorbed, the bigger banks absorbed some of these smaller banks, or the bigger banks absorbed other big banks like Credit Suisse, UBS Credit Suisse, where they had to take them over. That happened a few times. So now they're starting to realize we may not get to play. And there's a mentality amongst some people where if they don't get to play, they're going to kick over your sandcastle. Oh, we don't get to play. You don't get to play. It's that mentality. Or I'm going to hold you back, or I'm going to bring you down in hopes that if I can survive what I'm going through, then I can thrive. But you won't be there to see it. So I think a lot of that mentality has been pervading the banking industry. So, and keep in mind that the new financial system is viewed by like the smaller banks and the medium banks. And listen, we've been covering this for a long time, so a lot of you already know this, but we do have a lot of new people. But the new financial system is thought of as a baby or a lifesaver for the top end of the banking system by the smaller banks and the medium banks. They've been complaining that the central banks are stepping on their toes for a long time, right? Remember, they were bringing all those complaints to the BIS and to the IMF, and then they tried to calm the small banks down and say, wait, we're not here to take your business. We're just going to provide the wallets and, the NBFIs provide the technology, and you can continue to do what you do, even though we're going to release the CBDCs. Because you do know the CBDCs step on the small banks' toes, right? You do know that that could initiate a massive takeover of business from the small banks and pretty much hand it over to the central banks. Central banks really don't need the other banks once CBDCs roll out. So there's been this battle going back and forth. So what Gary Gensler plays a key role in there, in my humble opinion. What would be interesting is to know who, this is just my opinion, doesn't mean it's true, who's feeding him money. Right? So there's so much we could go into with that. So much. How many millions did Gary Gensler have with Sam Bankman-Fried? But FTX never got sued. And then Binance takes down FTX. There's so much corruption there. Binance had a heavy hand in taking down FTX. Remember all that? And then now they've been barking on Binance from that time till now. Time's getting interesting, folks. Let's move on to another article here. So this article here is from cryptonews.net, and it is titled, John Deaton Invites Crypto Users to Stand Against the SEC. I've been saying it for years now that all of crypto should have come together to fight all at once. I've said that quite a few times. Let's read this little tidbit. It says, John Deaton has invited customers of Coinbase and Binance to take a stand against the U.S. Securities and Exchange Commission in response to the enforcement actions initiated by the regulator against the crypto exchanges. Dean has taken particular issue with the SEC's claim of operating in the interest of customers and crypto users. We all know that that's absolutely ridiculous. It says, Dean took to Twitter earlier today to highlight the SEC's questionable conduct concerning the lawsuits filed against the crypto exchanges. The crypto lawyer cited Coinbase's application for acceleration regarding its initial public offering in 2021. The SEC approved the application after determining that it was in the public's interest. However, earlier this week, the regulator sued Coinbase, claiming that it would be in the public's interest to shut down the crypto exchange. They are out of their minds. John Deaton stated that he didn't agree with the SEC's claim that it sued the exchanges in the public's interest. Of course not. I don't agree with it either. According to him, the SEC is acting on its own agenda rather than in the best interest of retail traders. To that end, John Deaton has released a Google form for those a Google form. There we go, folks. And just in case you're interested in getting involved, Google form for those interested in participating in the court proceedings in order to make their voices heard. Deaton plans to establish a putative class of customers and crypto account holders who engaged with Coinbase and Binance to file an amicus brief. So if you want to get involved, there you go. There you have it. I suppose that this is on his Twitter, or there's a link or something like that. I know a lot of people are already involved. I know you've been calling. We've all been doing that, calling senators and calling Congress and sending off letters. I know. I get it. I know. We've been doing that for a long time. But I guess this is just one more way, if you want to be involved, that you can participate, all right, and fight against the SEC. All right. So now let's move on here to a little bit of Stellar news. Keep doing a good job, Stellar. So they put out this tweet it says about an hour ago, and it says, at Kato Money. I like any name with money. Money, money, money. It says a Web3 onboarding and infrastructure company now supports hashtag USDC on Stellar and leverage the Anchor platform to bridge their on/off ramps to the network. Now Stellar wallets, and that's what I want to hear. Let's put those Stellar wallets everywhere. Everybody needs some XLM. XLM. I want everybody having a Stellar wallet. Now Stellar wallets can offer Kato's global ramp services to users in 160 plus countries. Oh yeah, I like what I'm reading already. So Stellar continues to do big things. I can't wait until a future where everything is unleashed, but we still have a little bit of battle left to go. We will get there, and then we will see if the potentiality can be actuated upon. But this is very good. 160 plus countries. Then I scroll up. There's this little post here. It says, announcing updates to the Stellar Anchor platform, making it easier. See, they have these companies are pushing each other. They saw what Stronghold is doing. They see what BPV is doing, and Stellar Foundation is like, wait a minute. Let's make everything easier and stronger as well. I'm all for it. That'll bring in more businesses, possibly more people, possibly more banks, possibly. Make it as easy as possible. It says making it easier to build on Stellar with less development time and cost. So it's even more cost efficient now, when it was already insanely cost efficient before. It says support for deposit and withdrawal services on Stellar. Offer your on/off ramps on Stellar and connect to wallets on the network. See how they pushing wallets everywhere? XLM everywhere. I like what I'm hearing. I like what I'm seeing. Stellar, keep doing a good job. My humble opinion. So now let's move on here. Now this article I felt was potent, okay? This is from beInCrypto.com, and it's titled, Fed Banking Bailout Hits $100 Billion. Does this explain the war on crypto? I was just talking about something like this a little while ago. It says, banking crisis is not over. Haven't I been saying that? The unrealized losses, don't forget that. Commercial real estate, don't forget that. They're about to do a liquidity drain. Just type in on Google, liquidity drain, U.S. Treasury liquidity drain. And you're going to have articles pop up for you. That's going to be very, very harsh on the small banks. So the crisis is not over. It says the new funding program allows banks to, quote, receive par for their devalued assets in secret, unquote. Not secret. We knew about this. Well, a lot of us did. Noted market analyst Joe Consorti, the Bank Term Funding Program, BTFP, just in case you want to look it up, there you go, was created in March 2023. The aim was to make additional funding available to eligible depository institutions. This would be to help assure banks have the ability to meet the needs of all their depositors. In other words, a banking bailout. Unbelievable. Since Consorti observed that banks in crisis were using the fund to boost the value of their assets. Quote, banks are turning 50 cents into $1 without other banks knowing they're distressed and backing away. He added that it was a, quote, band-aid for now, unquote. Didn't I say that? They're putting a band-aid over a bullet wound. It says, but hidden risk is spreading. Wall Street Journal chief economics correspondent Nick Timiraos observed that Fed lending to banks through the BTFP has edged up to a new high. Why would they not take advantage of it? If you're not going to correct them, if they're not going to be punished, why would they do anything other than what they continue to do, what they've been doing? They've done wrong, no punishment. Why would they not continue to do wrong? You get where I'm going with this? This is the mentality that has brought about the worst monetary policy we've ever seen. Says the funding has increased for the 5th consecutive week, he added. The emergency lending for small banks, those small banks in trouble, was also noted by financial analyst Fraud Capital, who commented, quote, the emergency bank term funding program, your Fed made up their own and told Congress it wouldn't exceed $25 billion. It is now over $100 billion. So they lied to Congress. This financial system is in trouble. We'll see how it all shakes out, but it works out good for the new financial system, that's for sure. Now we get to this section here. It's titled Reasons Behind War on Crypto. It says Uncle Sam is doing all it can to keep its embattled banking system afloat. I like this writer. This is true. I agree with it, almost as though I wrote it myself. Is doing everything it can to keep its embattled banking system afloat. Several large banks have already failed this year as fears over another 2008-style banking crisis escalate. Big banks and Wall Street holds a lot of sway over federal regulators, which could explain why they're coming down so hard on crypto, because we would take all their money. We can dominate them. We can take over if we wanted to. If we had clarity, we could dominate, and they know it. And people don't like them anymore. They have to find a way to trap the people's capital in their burning system. It says crypto is a clear threat to the banking system, which is why it is so vehemently against it. Just today, Binance.us lost its banking partners, and was forced to suspend USD deposits. Banks and their partners in the government will continue striving to quash crypto, the biggest major threat to their profit margins ever to emerge. More so regular crypto. The bank coins, I believe we're going to win this SEC case and we'll be in the clear. They literally need us. They love the bank coins. They just don't like the rest of crypto. But they're going to make everyone, so they can hold this guise of we're against all of crypto. They're going to make everyone walk through the same fire. But it's a good thing that we're going through it first, and we will exit first. That will give XRP, if we win this SEC case, and I believe that we will, that will give XRP, XLM, Algorand, Quant, all the bank coins clarity They'll be in the clear because their use cases are so similar, and then they can take off and fly. My humble opinion. The rest of crypto, they don't like so much because they can't benefit from the rest of crypto. The rest of crypto is actually their competition. So, in a myriad of ways. And the banking system and legacy system is like this. If we don't have a purpose for you, if we don't like you, we're going to get rid of you. All right. And this is why the bank coin companies have worked so hard to ingrain themselves in all of these banks, shake hands with all of these bankers, all of these governments. They worked hard over the years while everyone else was like, oh, no, we don't want to do that. Now the rest of crypto has to suffer for that. This article is from kitco.com and it's titled Sentiment in Gold Remains Bullish. I told you, everybody who knows is bullish about gold because they know what's coming in the future. It says here, sentiment in the gold market remains bullish as momentum supports higher prices. But analysts are warning investors that they should not expect prices to break above $2,000 an ounce next week as the Fed Reserve looks to maintain its hawkish monetary policy stance even as it leaves rates unchanged. Yeah, I'm not worried about the price of gold whatsoever at all. Spot prices, I'm not worried about that. The latest Kitco News weekly gold survey shows the Main Street retail investors remain bullish on gold. I'm very bullish on gold in the near term. I'm bullish on gold in the long term. It says, however, Wall Street analysts appear to be cautiously optimistic ahead of next week's critical inflation data and the U.S. Central Bank's monetary policy decision. Colin Szynski, chief market strategist at SIA Wealth, we like SIA because of quant, right? SIA Wealth Management, said that from a strictly technical perspective, he is bullish on gold in the near term. Szynski said momentum indicators are starting to turn slightly bullish, which gives prices room to move slightly higher. However, he added that he doesn't expect gold prices to break above $2,000 an ounce, not yet. And listen, we're still sitting very high. You want to be completely honest about it. We're doing really, really well. It says, quote, I think the Federal Reserve will signal a pause in interest rates, and that could drive gold prices up another $20 an ounce, unquote, he said. Quote, but a pause is not an end to the tightening cycle. What gold needs to break above $2,000 is a clear signal that the Fed's tightening cycle is done. If a few more banks collapse, you're going to see gold's price explode. Just keep that in mind. So keep your eye on the banks as well and their health. Philip Strebel, chief market strategist at Blue Line Futures, said he is neutral on precious metals in the near term ahead of the Federal Reserve and recommends buying weekly put options in gold and silver as insurance against hawkish comments from the U.S. Central Bank. Okay, it's reasonable. Strebel added that with so much market uncertainty, investors should wait for a solid breakout in gold before jumping in. All right, that I disagree with. Okay, he said a break above $2,063 an ounce would signal a new bullish uptrend for the precious metal. Okay, it would, but why? You want to buy at possibly a high? I don't know. I don't know, folks. Maybe there's something I'm not seeing here. You let me know if you agree with that, or I don't know. I prefer to buy low. And then if it goes up, it's just protecting your value. Sure, you have a little bit of capital on top. I don't know why you would buy at 2,063 at a high. Like maybe there's something I'm not seeing here, but I'm just not going to be doing that. I don't need to do that. I'll buy at a low and let it go up. Boom. All right. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.